In this video, Tom Lee shares an optimistic projection for small and mid-cap companies in 2025, driven by enhanced business confidence stemming from a potentially pro-business administration. He believes this environment will foster company expansion and broaden the market, especially for financials and cyclicals. However, he points out risk, including possible policy missteps concerning tariffs or labor markets, and a shift in the Fed's approach from economic support to intervention.
To Milton Friedman reference is the ISM's been below 50 for almost 3 years, meaning companies have been cautious, their visibility hasn't been great, but finally the Fed is cutting, and we have an incoming administration that's seen as very business friendly. And so I think companies for the first time in a long time are going to be expansionary, feel confident doing mergers. I think this is a very good environment for small caps, mid caps, the financials, and cyclicals broadly like industrial. So I think it's going to feel a lot like the market broadens in 2025, even as tech sort of keeps up with the market.
Now, I know you are a quintessential optimist, Tom, but I'm curious, where do you see the biggest risks to that forecast for next year?
Well, there's, the big foil in 2025 is going to be whether or not there's a policy error, and there can be two sources. One would be if the incoming administration does implement tariffs that are damaging to the economy because we know that there'd be immediate effects, or if there are mass deportations that have some unknown impact on labor markets. The other source would be if the Fed becomes too inflation focused and allows the labor market to weaken. And so we actually slip from the Fed sort of trying to support the economy to the Fed trying to save it. I think that would be a very adverse development.
Tom, one of the big themes that we just wanted to point out for viewers and listeners out there was this idea that cryptocurrencies will still be a focus, given the focus of the incoming Trump administration. We know that you're bullish on many aspects of crypto, but I wonder if you might take us through where you see the best relative performance in that crypto landscape in 2025.
Investors, at our firm for the last 8.5 years, we have recommended an allocation to crypto, including Bitcoin or Bitcoin and Ethereum. That allocation probably should be much higher in 2025 because the regulatory landscape is actually becoming more friendly. So I think Bitcoin still has to be at the core of someone's holdings, and I see Bitcoin getting to around 250,000 next year. But that would allow Ethereum, which is around 3,500 now, to probably do even better. Ethereum could get to 5,000 or 6,000 next year, and I think this is also probably the year where there's what we call alt season, where there's things like Solana and other altcoins do extremely well.
Tom, if you feel as though, and this is, again, relatively speaking, that Bitcoin is a commodity and that some of the companies that leverage those commodities could be in play as well, much like gold and gold miners, what types of companies are going to be the ones that benefit the most from that crypto expansion if it were to hypothetically happen?
2024 has given us insights. If we look at the best performing equities that are related to Bitcoin, what we would call leveraged stories to Bitcoin, meaning that they're either acquiring Bitcoin as a treasury asset or they're leveraged to the price, have done very well. And that would be things like MicroStrategy, Semler Scientific, and Coinbase. And there are other companies that are sort of doing what Michael Saylor would call the Bitcoin standard, like Mara. But I'd say in investors' portfolio, if they're especially a large cap focus, a company like MicroStrategy, gives you really good exposure to Bitcoin.